our investors another uranium company on the chopping block. I'm going to talk about Rick Rule's favorite company based in the US, UEC, or Uranium Energy Corp. So this is the company in question. I'm going to do some quick company overview, take a look at the numbers a little bit, get an idea of what the company's been doing over the last 5-10 years or more, and then get into the fun stuff and talk about what the company's got, under what scenarios can this company actually prosper and return some money to the investors, because the mining companies, they're just money bleeders. It's not very fun to own them. In fact, owning a mining company is kind of like owning call options on the commodity itself with a very high strike price depending on what it takes to put some mines into production. So a quick overview here, starting of course with the price as always. So since 2009, the company's been pretty steady at around $1 to $5 per share. That's how much the option is. But you remember, with these options you got to keep refreshing them because they keep selling shares, and you're gonna have to try to keep buying as time goes on, because in order to maintain a level of interest in the company that you are happy with. Now there was a blip here down in 2008, but of course everything crashed in 2008. The company dropped, I think, below 20 cents, and then since it's been stabilized. Since 2020, the company's had a little bit of a rise, and that's probably because of the fact that the U.S. government agreed to purchase 300,000. I went from billion to million to thousand. How about that? Pounds of uranium from the company, which gives it a little bit of revenue, a little bit of income to help it survive even longer than it could initially. So let's take a look at the financials here. Obviously, the company has a very high PE rating because it doesn't make a lot of money right now. But when it comes to these companies, it doesn't make sense to talk about price to earnings ratio, price to sales ratio, any of these traditional metrics, because they're basically a holding company. I'll talk about that in a little bit, of assets that are up for sale. So you just have to pay kind of a maintenance cost for administrative purposes and some exploration, etc. So this is what the revenue looks like. They had some revenue come in 2021, a little bit, like 20 million or so. And then this is the big one from the US government. They saw, over $100 million in revenue. Now the company is valued at, we'll talk about this a little bit later, but 1.4 billion. So keep that in mind. If this was a regular company here, this would not be good. So what we're talking about is a different type of investment. Okay, so these figures are not going to tell us much. One thing I like to look at is operating expenses. Okay, so we can glean some information there, so we can see how much money is this company actually bleeding per quarter. And it looks like that since 2021, the company bleeds about, I want to say, $8 to $9 million per quarter. So that is kind of your cost. You can think of it, if you're an options player like me, you can think of it as basically theta decay. So this is how much your theta decay is on the company. The company is worth 1.2 billion, and then you're bleeding about 10 million per quarter. So you can make your calculations that way in order to stay long right? Stay long volatility on the uranium market. So that's the kind of the figure that tells me the most out of all these. The second most important one is not going to be net income. Although net income will tell you, how much the company is actually losing per quarter here. I have it set on per quarter, not per year, just to get some more definition in the company. I always like to do that. So even though they gained some cash, they probably spent some money on exploration or what have you, or some weird acquisition, and now the company is has lost $11 million on this last quarter, but that's not a problem. Shares outstanding. So this gives you the rate. This is the second most important, I think, number. This gives you the rate at which they dilute their shares. So this is what I was talking about. Like, if you are an investor in a regular company, you'll know that if you see this is kind of a bad sign, right? It's saying like, oh, well, the company is constantly tapping the investors for more cash to do whatever, buy inventory, expand research development, acquisitions. Sometimes the market will bless it, right? If they think the acquisition is good, sometimes not. But in this case, it's a little bit different. This dilution is basically survival money. All right. This is them deciding how much you need to pay in ownership in order to keep that call option alive. So since 2014, for example, the shares outstanding have quadrupled. You can see it on the screen there, from just under 100 million to almost 400 million shares outstanding. So this is the kind of stuff that you really got to be aware of when you're investing in a mining company like this. It's not even a mining company. It's like a project holding company, okay? So before I get into that and what this company is actually doing, let's go into the statistics, and at a glance, you'll see that the market cap is 1.24 billion. The enterprise value is 1.22 billion, which gives us about, 20 million in cash here. You'll see that reflected in the shortened balance sheet. There it is, 24.71 net cash in millions. I believe these are US dollars because the company is US. Although they do have some interest in other countries. We'll mention that in a second. My goal here basically though is to try to help us value the company and see if we can figure out, okay, is this a good investment right now? Should we buy this call option? I know the uranium market's been heating up, although the last few weeks has been cooling down. But the uranium market's been heating up. There's been a lot of projects that are turning over at like 50, 60 pounds. Dollars per pound. And people are looking for opportunities to own companies that will profit from a rising tide in the uranium market, and UEC perhaps is one of those companies. I made a video on so far Energy Fuels and Chemical, so you can check those out. If I remember, I'll try to put the links below, but if not, just go to the channel page and just scroll down a little bit. They're right there. So all right, so that's basically it about the company. We can't really learn anything besides that. So perhaps the employee count, this is probably where the operational costs come from. Okay, so here's where the real homework is going to be done. Now, you don't need to be an expert or dig too far into like some real secret or hard to find information sources. Everything that you're going to find is right there. You basically have to trust the company's word on their own research because that's the only data you're going to get. I mean, you're not going to get like some independent, explorer out there going to Canada and verifying results, or going to whatever, New Mexico, and like looking at tapping at rocks and like independent consumer rating, right? That's not going to work. There's no credit report here. You have to trust the company's homework. For the most part, nowadays, especially, mining companies have been pretty honest. They do a lot of due diligence. There's a lot of reputation at stake. They could lose their whole life's work, and I don't think an individual inside the company will sabotage a company like that anymore, even if for a quick gain or something like that. So, but we won't know until the uranium market actually does heat up and some of the assets that this company holds go up for sale. Now, before I dive into the projects, let's talk about this company real quick. So this is a US-based company, which is very important because of the sensitive nature of uranium. There's a reason why the US government decided to buy, pounds of uranium from UEC and Energy Fuels. There is a drive to more nationalism nowadays, and these companies will benefit from domestic demand. The only downside is that there aren't that many nuclear plants in the States. Like, for such a big and rich country, you would think that United States have more nuclear, but they just have like a couple of large plants now. I think there used to be 4, now there's 2. I don't know. They keep phasing them out. There's supposed to be 2 more in production, but regardless, the numbers are minuscule compared to some other countries like France, right? Or in the near future, China and India. Okay, so some countries are really gearing up on nuclear, and even countries like Japan, right? The most seismically sensitive place on Earth, where there's like 4 plate tectonics merging and submerging one to one another. And of course, that's the reason why we got the Fukushima disaster, right? Even they have more nuclear plants operating than the United States. I'm not sure about the actual output of them, but just the number is higher, okay? But let's see what this company is actually doing. So ever since, its inception, I think the strategy for the management has been to acquire as many, assets in the ground as possible, as many permits and mineral rights as possible, to build kind of a portfolio of assets that they can then sell off to bigger players that actually do the mining, right? Players like Cameco, players like, well, I guess Energy Fuels, but Energy Fuels is also pretty small and they have assets of their own, but, eventually somebody's going to mine those assets. It's just a matter of price, right? It's just a matter of price. Is it going to be economically viable or not? That's the only question out there. So I like to speak of this company and many other companies like it as a call option on uranium. But you need to know, if you're investing in this company, this call option's got quite a high strike price. So things are only going to start moving if uranium, in my opinion anyway, is well north of 100, maybe 150 per pound and higher. And not only that, but it cannot be a spike. It has to be a sustained period of $150 per uranium plus for this to start paying off, right? The price might get reflected, it might spike initially. With the spike, just in a speculation that the price might sustain over 150 per pound. However, it's going to fizzle out if the price does not stay sustainably over 150 per pound. It needs to be there, I don't know, for more than a few months, because then you'll see lots of activity. Then you're going to say, okay, all the firms around, all the miners around, they're going to be going through their assets, they're going to reshuffle stuff. They're going to say, okay, do we have enough just in case this thing keeps climbing or stays high for a long period of time? And they're going to start buying the most lucrative assets. And UEC has some lucrative assets. So if we go to the website, it's a good segue to look at some of their projects, right? So they have a ton of assets. Well, actually, let's go here. Yeah, project highlights. Just show you on the map real quick. I don't like this map, but it gives you an idea. I'm a pretty visual learner myself, so it gives me an idea of what's going on here. So they have a bunch of interests in Canada. Those are probably the highest grade ones, the more potentially lucrative ones. But they have some interest in the United States as well, some mineral rights here. And then they have, in New Mexico, Arizona, Texas. And they also have some kind of like pet projects here in Paraguay. One of them is showing like it's in Brazil. I don't know why it says Paraguay when I click on it, but whatever. So Paraguay, they have a couple pet projects there. Now, let's go into their specific projects. Now, a lot of people don't actually look at the website of the companies, but that's actually one of the best kind of overlooking resource for information. Like I mentioned, this is the only source. There's no independent review here. Okay, this is it. So you can view basically all the projects. I went through all of them myself, and I can tell you this company has hundreds of millions of pounds in the ground. That's a lot. Okay, just to put it in perspective, hundreds of million pounds. The U.S. contracted for 300,000 pounds. That's it. Just 300,000, and then they got like another 300,000 from Energy Fuels or something, and that's not a lot. Maybe they're buying like 1 million pound in total in a reasonable amount of time, and that's more activity than they've had in the last 10 years or more. Do you see what I mean? So the demand is very, very slim, unless there's some kind of a choke, unless there's some kind of a bottleneck going on in the industry, like this is just not happening, right? It's just going to be survival mode all the way through for tens and tens of years until something actually happens. Like there is some excitement, right? There's some excitement because the price has gone over $50 per pound, and people are starting to like think, okay, is this it? Is this it? But the reality is, it has to be well above 60 for things to start actually defrosting. Okay, for for companies to take the uranium projects out of the freezer and start defrosting them, defreezing them, whatever it's called. It would need a higher price than that. This is just like pounds that people already have on hand, that they're just sitting in their facilities ready to sell, and they're not even thinking about turning on any projects at these prices, really. It would have to have an extremely high grade project for them to even think about it. Otherwise, really, it's a no-go. And there are some super high grade projects. I went through all of them. It looks like the highest one here that impressed me the most. Just to give you some perspective, let's take a look at a regular one. So you can see, this is pretty high grading here. 1.49% U3O8. U3O8 is basically the uranium that you find in the ground. Because uranium undergoes different phases, okay, in processing. I'm not going to go over to like the uranium processing, map of events, partly because I'm probably not the best person to explain it. I'm not that knowledgeable in it to begin with, but I do know, I've read into it before, and I do know that it undergoes many different forms before it's actually usable and goes into the reactors. But that's besides the point, right? The point is that it has to start from the base raw resource, and this is what's important here. So just from like Shy Creek, they have almost 100 million pounds, right? Indicated and inferred combined. And the grading is actually really high. Just to give you an idea, 1.49% uranium, that's very high. Usually it's under a percent. So if we take a look at another project, you'll see a more realistic. Oh, this one is 1.57. When I'm looking at the Canadian ones, which are pretty high grade, but for example, the Arizona, New Mexico ones, they're pretty low grade. I mean, look at this one, 0.09. There's even worse than that. There's even worse. Let's take a look at another one. So these are not likely to be mined unless think the U.S. government is really in a pinch. Okay, so for example, there's 30 million tons having an average grade of 0.02%. That's really low grade, right? So anything just under percent is probably okay. Let's take a look at this one real quick. Well, anyways, you get the idea. You get the idea here. So look at this one, right? So Canada, this one I flipped out when I saw this, when I read this. So look at the very last project under their, other projects on their website. I'm just going to read this aloud in case you're on the phone, you can't read it. Interest in the Ryu or Ryu, whatever, lake area was piqued when historic radioactive boulders containing up to 11.3% uranium were found on the property. 11.3%. 11.3% uranium. That's huge. Remember how I said like 1% is really good? It's 11.3, but that's just for individual boulders, okay? UEC considers Ryu Lake to be prospective for the discovery of unconformity-style uranium deposits. Drilling to date has intersected 0.448% U3O8 for over half a mile near the, I think that's half a mile, I hope so. Or is it like a half a meter sample or something? No, the samples are smaller. This got to be a mile. I don't know. If you know, let me know. Or let us know. Near the unconformity in hole RLG D21. Within widespread area containing radioactive springs and 0.5% U3O8 over 0.07 mile in a single hole associated with the PM conductor area. So UEC owns 100% of the project. So the actual, you know, density rate is not that great, but just the fact that there's individual boulders 11.3 says that there could be, kind of an imbalance. There could be a high concentration in specific areas, which could make it really lucrative. But we don't know. The thing, there is some downsides though. Okay, so it's not all fun and games. There are some downsides to just this call option thing. Not just the fact that uranium price needs to be like way higher than it is right now for they to be viable and to be sold to some of the bigger producers, or for there to be a team that decides to kickstart the mine there. Not only that, but they have a lot of competition, especially for these lucrative Canadian holdings. There are many Canadian and US, but especially Canadian companies that are probably going to get tapped first, who have properties and joint interests around those same areas, around the areas that even Cameco owns. Cameco is, the second largest producer of uranium in the world, and basically the source of uranium worldwide, at least in the Western world. So, Kazakhstan is for the eastern, whatever, and west, and Cameco is basically west. But that's besides the point. The point is that Cameco is going to go shopping, right? If the price of uranium goes really high, let's say 150 plus, they're going to go shopping. They're going to be like really trying to pump the supply into the markets. They're going to be, securing lots of long-term contracts at high prices. So that's going to be great. But they're going to need to fulfill those projects. So the mines will need to be built out. And if they've run out of resource, which they probably won't, realistically, okay? So this is like a very slim chance of it happening. The reason they won't is because they have so many assets, Cameco does, of pounds in the ground, just like UEC, in fact, some of them are really high grade and they're non-operational at the moment because they're waiting higher uranium prices. They have plenty of pounds above ground already to satisfy all their long-term contracts for quite some time, and they're not in a rush. They're not in a rush to mine. So they're going to tap all their resources. Maybe strategically they'll buy new resources to replenish, but they'll tap all the mines they already have. They'll get those running. Then they'll try to develop the projects that they already own. They'll get those running. And then maybe after that, they'll look at the Canadian, companies around them that are close to their projects and their mills already. And they'll tap them. They'll buy them out. And then they'll have additional resources for I don't know how many years ahead. And then, and only then, at the very last, at the very tip, okay, of that entire structure, you got UEC and their holdings, right? So they're gonna tap UEC after all that's done. Sure, somebody might acquire assets strategically, but they're not really gonna realistically use it until there's some kind of super global demand for uranium out of nowhere, and let's say the U.S. decides to build nuclear reactors, 5 of them in every state, okay, which is not likely. But that's the kind of scenario that that USC is really going to be benefiting from. And if there's really that much of an explosion in uranium price, then UEC is definitely the place you want to be. That thing is just going to blow. I mean, I wouldn't be surprised if under that scenario where, prices are sustainably, let's say over a year at 150 or maybe 200 plus for over a year, I wouldn't be surprised if UEC goes 1,000x, okay? Or if the price goes completely crazy, right? I wouldn't be surprised if 1,000x, because we're talking about hundreds of millions of pounds in the ground. You can do the math. I am not that good at math, but I do have a calculator. So let's say 100 million. They have more, but I'm just being just deal. Bear with me here. Just napkin math, okay? Worse than a napkin math. Times, let's say 500 equals, okay, so that's 100. So I gotta do it over. Times 500. That's I don't know, 50 billion. Okay, so that's 50 billion. Pound. I'm sorry. dollars that, just in the pounds in the ground, basically. So, it's quite an increase, and just the way the stock prices work, the influx of investors is probably going to bid this thing through the roof. It's gonna be incredible. So that's my take. The valuation part, okay. Let's talk about valuation for a second. All right. So currently, like we mentioned, it's sitting at 1.24 billion market cap. This option, in my opinion, is pretty well priced. I mean, I'm not big enough expert to know, exactly considering, the upside, whether or not the price of this collection of uranium assets is fair. However, just looking at the theta decay, right, we noticed that their operating costs about 10 million per quarter. That's not that much, right? So you got to figure out whether that cost per quarter is worth it to you based on a $1.24 billion company. And how long do you want to hold it? What percentage of your portfolio do you want to have in this company? How much is this option worth to you? I think you really should not be looking at whether or not to buy UEC. You should buy UEC if you have insight on the uranium market. Like, that's really the only thing you need to be concerned about. Like, I would not be concerned whether or not, UEC is a good bet or not. I'd be concerned whether uranium is a good bet or not. Like, that's basically where your research should be. As a company, it's fine. They hold their list portfolio. That's their strategy. You know what they do now. You know what their burn. You know what their valuation is. You know what they're holding. So there's no more research really to be done here. You just got to focus on, okay, what are the drivers of the uranium price? What's going to take for it to pop up? Does it have the potential to do this? The answer, of course, is yes. Otherwise, nobody will be participating in these uranium markets. They can be very explosive, as we saw, early 2010s and 2011, etc., and right before the Fukushima disaster. So, this demand is pretty static, and if the supply drops, if uranium starts getting sucked from the open market, the price moves can be pretty dramatic, especially with the build out of new reactors, etc. Make sure that you always keep an eye on, all the reactors that are being retired as well. There are plenty of people doing this work, though, so make sure that you have some kind of an edge, okay, over the people who are already doing this type of research. Like, if you don't have some kind of information that nobody else has, you may be better off just listening to the people who are already doing the work, and try to use good data from them, and then make a calculation of whether or not this is worth it to you. Okay, so of course, as always, none of this is financial advice. We're just kind of spitballing, over the uranium market and UEC, and seeing if UEC is actually a viable option to play the uranium upside. And the answer is yes. It is a very good option, but it's just that, an option on uranium, and an expensive one at that. All right, that's it for now. Peace out.